Hey, what's up everybody? In this video, we're gonna be having Steve Penny, one of the best newsletter writers and researchers in the precious metals industry, doing a market update on what's going on in gold and what's going on in silver so that you know really what's happening and can prepare accordingly in your own investments. So this is going to be a guest post, the rest of the video from Steve. Just want to remind you to make sure that you sign up for Steve's free newsletter, which is Silver Chartist. I think it's the best free newsletter that I'd ever seen, especially as it pertains to gold, silver, precious metals. He also talks about uranium. And so it's right there down below in the description and comments. You'll see the link to it and it is free. So without further ado, welcome Steve to the channel.
Hey guys, my name is Steve Penny. You might know me as Silver Chartist on Twitter. I've also been a guest here on Jake's I Love Prosperity channel a few times now, and he asked me if I wanted to come on each Friday and do a standalone post where I cover the charts for silver, uranium, and gold. And this will be something we would plan to do each week. So if you find value, let us know. Hit the like buttons down below. Leave a comment below. Let us know what you think. And we'll go ahead and get started. But before we do, let me mention that this channel is sponsored by Vizsla Silver, which is an up-and-coming silver exploration company down in Mexico. So let's go ahead and open up some charts. So whenever I sit down to look at charts, I always like to start by looking at the dollar, as it can give us an indication of whether we have some headwinds or tailwinds for the metals and commodities as a whole. And when I pull up the chart here for the dollar, what I see is a series of lower highs and lower lows dating back to March of 2020, and I see price trading below a declining 200-day moving average. Now, most technical analysts right there would say that's the definition of a downtrend. So the dollar is trending lower and it looks weak. That said, in the short term, you could make a case that we're putting in a short-term bottom here, and it wouldn't be too surprising to see the dollar rally up towards this declining 200-day moving average. Now, if that were to happen, that does not have to necessitate a further decline in silver and gold. In fact, I think it's more likely that we see gold and silver continue to consolidate if the dollar does get a little short-term bounce here, which is by no means a foregone conclusion. In fact, if you look back to this chart in August of 2020, what you see is an absolutely identical pattern. This little bull pattern here also played out back in August. And what happened is we got a little false breakout and then price resumed its downtrend. Now, it remains to be seen whether we're going to follow suit this time, but I think that is a very likely outcome. So when we move on to the chart of the dollar here, what we can see is this clear downtrend channel dating all the way back to August of 2020, where we reached an all-time high of $2,089. We've since tried to break out of this downtrend channel a couple of times, and last month we got a false breakout, which formed a double top on the charts here at this 1966 level. And now price is hovering just below this 200-day moving average. Now, you'll hear me talk about this 200-day moving average a lot because it is the most used indicator by the institutions and institutional trading algorithms that really drive these markets. So what you really want to see is price above a rising 200-day moving average. And right now we're sitting below it. Now, that doesn't mean that we're necessarily headed lower in gold, although that is possible. We could see a short-term pullback, although I do think it's rather unlikely. The key level to watch on the downside here is 1767 support. That's the low of this downtrend channel, and we printed this low back on November 30th. And if we were to get a weekly close below 1767, that could portend some more weakness in gold prior to resumption of the uptrend. However, I do expect this 1767 to hold, and I think more likely is we reclaim the 200-day moving average in short order. And then once we get above 1966 and 2089, I think gold could really be off to the races, and a quick rally towards $2,400 or even $2,500 this year would not be surprising at all. But we do want to watch this 1767 support level. Now, turning to silver, silver actually looks much healthier than gold on the charts. What we see is price above rising moving averages, above a rising 50 and 200-day moving average. We also see this clear green uptrend line. You see this right here? Going back to the March lows of 2020, we tapped this line here, tapped it again here, tapped it again here, and prices rallied off of this support line each time it's been tested. Now, if we were to lose support here at this green uptrend line, the path of least resistance would be a further pullback towards the 200-day moving average, which currently sits around $23.50. I do think that's the less likely scenario. My bias is up, and I think that we clear 29.92 and 30.35 here in fairly short order in the coming weeks and months. And once we get above this 30.35 high, which we printed last Monday, I think we could really be off to the races in silver. And I continue to think that $50 silver is a very real possibility in 2021. After all, we saw gold break out to new all-time highs in 2020, and it's very characteristic of silver to follow suit, to do what gold does, only with a bit of a lag. So I would expect silver to break out to new all-time highs as well. Moving on here, let's take a look at the ETF. I like to track this ETF, and SILJ is the Junior Silver Mining ETF. And I've long been saying that junior silver miners represent the most undervalued component of the precious metals complex. And sure enough, SILJ has really outperformed over the past 6 to 8 months. And that's a trend that we do expect to continue. However, the ratio compared to other aspects of the precious metals market has begun to normalize, although junior silver miners do continue to represent the most compelling value proposition. So we see price sitting above its key moving averages here. This blue line represents the 50-day moving average, the yellow, the 200-day. And we've also got this clear green uptrend channel right here, or green uptrend line, I should say. And price is sitting below resistance between 17 and 1763, which is the high that was marked last week on the silver squeeze. So my bias is up in SILJ, and I think this ETF, and as well as this component, the junior silver miners, really have tremendous upside potential here, especially in the months ahead. Now, when we look at a ratio of junior silver miners versus junior gold miners, what you see is junior silver miners have really been outperforming by a wide margin going back to 2020. And we're still in the middle of the range here. Junior silver miners are still undervalued, but they're not quite as undervalued as they were. So I will be starting to look more towards junior gold miners as this ratio normalizes. Turning to uranium here, a lot of silver people aren't too familiar with uranium. I always like to tell silver investors, hey, take a look at uranium. And I tell uranium investors, hey, take a look at silver, because the two markets really have a lot in common. They're both sitting just around $30 spot price. The intermediate term target on both is roughly $50. They're both really small markets, and when institutional investors try to pile in, there's just not many places for them to go. And both of these markets are really ripe for some really large gains in the months and years ahead. So I like to track uranium very closely. And what we see here is the spot price sitting just around $29 within the context of this clear uptrend channel that goes all the way back to 2017. So my bias is up in the spot price of uranium. And it's important to note with uranium, this $30 spot price is nowhere near high enough to incentivize the new production that's going to be needed to meet the rising demand of nuclear. In fact, the consensus is that we need to see at least a $50 spot price to incentivize the new production to meet that demand for these coming nuclear reactors that are coming online. So uranium represents a fabulous opportunity right here, right now. And a lot of the mining stocks are seeing that, and they're moving in advance. What we see here is the URNM. This is a mining ETF. And if I could only own one ticker in the uranium sector, it would be URNM. And what we saw last week is a high volume breakout above previous resistance, which is now support at this 48.59 level. We are getting a little bit stretched on the RSI. Whenever this white line is above this red line that you can see right here, that's considered overbought, and it can mean that you're due for a pullback. However, I would view any pullbacks in this sector as opportunity to accumulate more positions. So hopefully you guys found this video helpful. Let us know what you think in the comment section below, and if so, we'll do more of these. I'm open to doing this every single Friday. We can even add some more charts, some stocks that you guys want to see. And by the way, I want to mention I do have a free e-letter that goes out every Sunday where I expand on the thoughts that I just shared here. I identify specific stocks that are nearing buy zones. We talk about my personal portfolio. We have a focus list. So the way to do that is just click the link below, get our free e-letter. We don't spam you. Our goal is to provide tons of value for free each and every week. And we do have a premium service, but we keep that very low ticket, and there's never any pressure to upgrade to that. So click that link down below, get our free e-letter, and look forward to speaking with you guys next week. Have a great weekend.